Morning. Let's get right into broad market outlook. Last week we had again a little pullback in the SPY, something that we had been expecting for the last kind of week or two with the breakout that we've seen. We've been in this very clear upper channel, this stage 2 breakout stage that we've been in, very clear. And again, when we're near resistance, this red line is when we want to be thinking to be selling. This is often how everything looks perfect. As we come into support, this green line is when things look pretty weak. Most of the sectors are kind of rolling over and breaking down. Things don't look as positive. Charts aren't really setting up as well. But you give it a couple of days to kind of shake out in this little green area, and that's when we can find those support buybacks. So coming into the week, again, even for shaking myself, did not find the most ideas, and that's not too surprising, just given the action that we saw at the end of the week. We saw it in the SPY. So same thing in the Qs. Just very obvious breakout stage, and we're just in a shorter term pullback. You saw the industrials. Again, we were trying to highlight the last few weeks. This is an area to take profits. This is the retest area, the prior all-time high. It's often when sellers are kind of coming in. You have all the traders that were buying late 2021 trying to get out of their position for break even. So you often get met with resistance. That's what we're seeing here in the industrial sector. It is a great sign that they did retest and push new highs, but it's not surprising that they're starting to roll back over and they're going to pull back into this range. This is just normal, completely very normal action from a technical analysis standpoint. We're seeing technology again, second place in the race to new highs, with industrials in first. Again, very close to retesting, a few weeks ago, but still consolidating, still setting up, and probably going to have to shake out this pivot low, this 422 area. And that's kind of across the board here. We're seeing this in the consumer discretionaries. Now, this is probably the sector in third place. Took out its major base break recently, but not anywhere close to all-time highs. But we're seeing, again, some clues under the hood. We're seeing these lower highs highlighted here with these arrows. So you had this recent high formed here. You had lower highs formed recently, and it's telling you that this kind of sellers are in control, and we should expect some lower price action. So even from the sectors that have been leading, it's been somewhat weak. The only thing that's really been rallying has been interest rates. 10-year has been rocketing higher. Mortgage rates have been pushing higher as well. But on the equity side of things, most have just kind of been resetting and holding up from the last week, or kind of rolling over. So onto some ideas. Again, this MLM still sitting up here through this 463 area. Again, still very wide. 2 days ago, kind of shook out major support on Thursday, came right back. So that's a great sign that it did snap back up into this area, which leads us to believe that we should see a breakout higher in some time. But again, it's still too wide. 30 points, probably 70% risk here to give it versus that proper out. It's just too wide. So if we get a day today where it can kind of pull in and kind of hang out in the middle of this range and start to consolidate and fly a little bit more, this through 463, again, the all-time highs looks really good. Just not ready just yet. This Nike here, a little base, little support buyback. In this Nike here, earnings aren't until end of September, so plenty of time. This one, I got into this one earlier last week through this 110. It seems like for now, this 111 area seems to be a little bit more important than the 110 area. So just setting up, not something that I would be buying third day up, but one just to keep on the radar, as the Dow 30 names have been somewhat strong lately. TDG went on Friday, but quickly reversed through this 900 area. So we should expect some type of pullback today and tomorrow in the name, given the close out on Friday. But again, this name through 900, looks pretty solid here. All-time high breakout. This needs a little bit more time to develop. Lastly, on my end, we have this NVR. Very expensive name, $6,400 a share. So you might be picking up, a couple of shares in this breakout, but still very defined risk here. We have this 200-point flag forming in the name, very textbook bull flag forming with earnings out of the way. So this could be one to keep on the radar. Again, very expensive stocks. You might be only picking up, a share or two in the name. A couple shakedown ideas that Shake talked about in the newsletter. We have this AEHR, nice little flag forming here with earnings out of the way. keep an eye on that on that 54 breakout. Also this 52 area, 52, 54, versus this 46 area. This Skechers SKX, we have this sneaky buyback back up through this 55 area. We can see that it broke out earlier last week. It was setting up, going back since May. Very clear flag here, broke through. This is often the time where most of us start to forget about the name. We try to take it to 55. It goes $1 or $2, comes back to our price. We get out, we move on to the next name. And this is where it kind of pulls in, sets back up, and gets that sneaky entry where we forget about it. And it goes a few weeks later. So this is one, again, the main theme here is most of these ideas are going to take some time to develop, whether it's a few days or a few weeks. These are great ones where you can just set alerts. I just set an alert here for this SKX. And when it gets back up here, the alert will pop up and I can type the name back up and see how it's setting up. A few of these other names, just earnings gap ups that need to consolidate. We have this WK. Setting up for move through 108. Again, not trying to chase this day two. Might push through it today, just given how it closed on Friday. But if this can kind of settle out and flag here between 104 and 108 and we get that next entry, looks really good. And last but not least is this KMX, CarMax. Again, super tight here. Earnings are out of the way. A nice little wedge forming here. Very tight. So this is probably, again, go through all the steps we've gone over so far. Probably the best one here through this 84.5 versus 82, $2.5 risk. Through this little wedge, you don't really have much resistance. The next real key resistance area, it's 93 areas, so definitely has some move to, some legs to go higher. So that's all the names we want to go through today. Brad or Brandon, if you guys have any ideas you guys want to go over, if you don't meet yourself or you'll mention this little chat, we can definitely pull those up as well. All right, guys, no ideas to go over. Again, probably be pretty slow the first few days this week, just given the action we had last week. Just let the market kind of pull in to the support area in the SPY, which is going to be pretty much this 440 area. When we do start to see some action at 440, this is when we want to start looking for more of those entries, the support buybacks. We want to give it a few days to kind of pull back into this before we kind of rush back into the fire. And any questions that you guys have, post them in the chat and we'll be here to help you all week.